Hi everyone, welcome back to my channel, and today I'm going to talk about what a mega backdoor Roth IRA contribution is. So let's get started. So this thing called a mega backdoor Roth IRA contribution is basically having after-tax contributions in your 401k to be put into your Roth IRA when you retire or when you leave your work. Now, this after-tax contribution isn't very common. A lot of employers don't allow it. I've actually never heard of until just recently, and the only reason why is because I was taking about 75% from my check and putting it into my 401k. And while I was slowly getting closer to the, max contribution, so $19,500, I had assumed that my employer would stop pulling the 75% from my paycheck and I would receive the full paycheck after taxes. But that didn't work out that way. During one pay period, I received my paycheck and I realized that 75% was still being taken out after it was being taxed. So I was trying to figure out what is going on, I only have this amount of money. I should be getting much more, and I was kind of freaking out about that. But I dug into more detail about it, and it turns out I had maxed out my 401k during that paycheck. So I think about 2,400 of it was finishing up my 401k amount. So they had put in 2,400 into my traditional 401k, and then the additional money that was left over from the 75% that they had taken out, they had put it into this bucket called after-tax contributions. And I did a little bit more research on what exactly this meant or what this is. And it turns out that there is this thing that if your employer allows it, you can have after-tax contributions to your 401k. And there is a limit on the total contributions. And currently it's $58,000. And this includes contributions into your traditional or Roth IRA, so $19,500, as well as your employer contributions. So for example, the total amount of after-tax contributions I can add or put into my 401k would be the $58,000 minus all of the contributions from myself and my employer. And with these pre-tax dollars, once I contribute them, they will be residing in my 401k. Currently would be my traditional 401k. So any gains that I would make on this money when I invest it, it will be taxed at my income tax when I do take it out. And I have to take it out after the age of 59 and a half because it is in my 401k. So that's the real kicker. I'll get penalized for that if I take it out any earlier than 59 and a half. And I will also be taxed at my income tax rate instead of long-term taxes. So at first I thought about this. I'm like, this isn't a really good deal. I think it might just be better to be put into a brokerage, right? But I did a little bit more research on this, and it turns out that if your employer also not only allows after-tax contributions, but also allows in-service withdrawals or in-service rollovers to a Roth IRA or a Roth 401k, then that will be perfect, because then you can contribute to this Roth on top of the $6,000 contribution limit for that year. And as it turns out, my employer does allow this. So it's actually really amazing that they do this, because now if I were to contribute $2,500, for example, into my 401k as pre-tax contributions, I can have them immediately request a rollover to a Roth. But the thing is I do not know if they will be creating a new, account for me to put this money into a Roth 401k, because I currently don't have one, or if they will roll it over into my current Roth IRA account. So I'm unsure about how this will go. So I'm currently in the process of doing this, and I will probably give another update on what happens and let you guys really know the specifics on how these contributions work, because I have never experienced this before. So I really can't say in detail what exactly happens to your money if you were to immediately, do an in-service rollover with your employer, or even if your employer allows it, how do you determine if they do? So I will give you guys more information about that later in another video, but for right now, that's what I'm currently doing. I'm waiting for them to make this in-service rollover to a Roth. And the other thing that I need to figure out is if this is to roll over into a Roth, can I take out these contributions 5 years from now? I know I can do that with a Roth IRA, so I could take out 5 years from now, I can take out the $6,000 that I had contributed this year. But can I do this with the pre-tax dollars that I put into my 401k and then had it rolled over to a Roth? I don't know. That would be really great if I could, because then I can contribute up to, what was it? My employer matches about, I think, 10% of my total salary. So it would be about $10,000, including my $19,500. So that'd be $29,500 subtracted from the $58,000 total contribution limit. So that would be about what, 50, 40, 30, about $20,000 around there. Actually, I'm going to look this up right now. So it would be about $58,000 minus the $10,000, about $10,000 from my employer, and then minus the additional $19,500. So that'd be about $28,500. So if I can take out my pre-tax contributions 5 years from now, then that means in total at the max, I could take out $28,500 plus another $6,000 because I did contribute to my Roth IRA. And so that would be about what? $34,000, about $34,500. So that would actually be really nice because I could live off of that, and I could just take out that money without being taxed on it and without having any sort of income tax, as well as being penalized for taking out my gains or taking out the money before the 59 and a half age limit. Again, I don't know for sure if I'll even be able to, take this out 5 years from now. And I think the only way I can figure this out is what will happen to these after-tax contributions when they are rolled into a Roth. Are they rolled into a Roth IRA or are they rolled into a Roth 401k? Because that can make a huge difference. And are these after-tax contributions considered normal contributions that I would put into a Roth IRA? But once again, I did do some more research, and it does sound like that these after-tax contributions are considered Roth IRA contributions. So I am assuming that I can take out this money, and if I could, that would be great. So if I could take out $28,500 every year, or $34,000, including the $6,000 that I contribute to my Roth IRA anyway, then that would be awesome. I could live off of this, and I wouldn't have to worry about having any sort of penalties on the money that I take out because I'm, younger than 59 and a half, and I don't have to worry about income tax. So that's actually really nice. But again, I don't know for sure. There are not a lot of videos about this online. I did find maybe 2 or 3, but again, this is something that I have never heard of, and I just find it so interesting. I'm surprised that a lot more employers don't allow this to their employees, because if your employer allows after-tax contributions and in-service rollovers to Roth, this is a no-brainer. You should definitely take them up on this offer and try to contribute as much as you can to these after-tax contributions, because in a way you are adding more than the maximum contribution limit to a Roth IRA. So instead of it being $6,000, it is now $34,000, at least in my case. And it's just amazing because you can definitely take advantage of this and use this to build wealth, be that much closer to financial independence, and to avoid taxes. So that's actually really nice. But I'm just shocked not a lot of employers allow this, and if they do, it's not a very common thing. I could not find a lot of information about this. I thought I would do some more research and figure out what else I could gather about this, and then also give you guys some information, because maybe you might find it helpful too. Maybe your employer does allow this, and they also allow in-service rollovers to Roth, and you don't know about this. Then hopefully now maybe you'll be able to figure that out, or you can look for an employer who does allow this. I don't know, but I thought maybe you guys would find this helpful. I know I did. I've never heard about this. Even in all the finance books that I have read, they have never once mentioned after-tax contributions to your 401k. So you could see why I was a little freaked out by that when my employer took out more money than I had expected. So it's really interesting. But if you guys found this helpful or useful, please let me know in the comment section down below. And if you have any more information about this topic, please put it in the comments, because I would really appreciate it and I would find it useful. So if you guys like this video, please like, subscribe, and thanks for watching. I'll see you guys in the next one. Bye.